Hey, good morning, small business owners, and welcome to Monday Morning Metrics. Every Monday morning, I jump on Facebook Live and I talk about something financial, something that ties your finances into growing your business, entrepreneurialism. Yes, every Monday we chit chat about something. So my name is Rebecca Berneck. I am the founder and big head of Office Heads. We are a financial management firm located in Evanston, Illinois. So here we are. Welcome on this short week. It is the Monday before Thanksgiving. And if any of you have ever cooked for a large group on Thanksgiving, you realize that timing is a really important element because it's actually quite difficult to make sure that all your side dishes and your main dishes and your turkey come out all at the same time. Usually it doesn't work out well for me. A lot of times it doesn't work out perfectly, although I try. So timing is super important. So I thought today we would talk about the timing of financial tasks. So if anybody's heard me speak before, we at Office Heads, we rely on something called a track map. And so since I tie in racing motorcycles to financial management, it's like going around a track. You got to do the same things over and over again. And timing is super important, at least if you want things. It's important for cash flow, but it's also important for efficiency. So I'm going to chat a little bit about the timing of various financial tasks. So let's start with, when it comes to financial management, what you need to do or what you should be doing on a daily basis. I mean, daily basis is pretty easy because you don't need to be managing your finances on a daily basis, but kind of subliminally you can. So the one thing that you need to do every day is check your mail and see if there's any checks there. Because if there are checks, make sure you mark them as paid in your QuickBooks file and you get it in the bank. I believe that cash flow is king, and that money, if it's not in your bank account, can't really help you because you can't spend it, can't use it. So every day, money going into your bank account, make those bank deposits every day. And the next thing that you do every day is you incur expenses. So either they're cost of goods expenses that have to do with delivering your product or your service, or they're operational expenses. So you're using your debit card, your credit card, hopefully not cash because it's harder to, it's just a little bit harder to book all your cash transactions. So debit card, credit card, check, you're incurring your expenses. But hopefully you understand the story that your numbers tell because you've been reading your financial reports. So every time you incur an expense or your staff incurs an expense, it is for a specific reason, for operations and for service delivery, and you're trying to keep your expenses, smart, low, because really what you want is profit at the end of the day. You don't want to be spending a lot of money just to operate. You would like to be operating a lean organization and having a lot of profit at the end of the day. So on a daily basis, you're getting your checks and you're depositing things in the bank, and you're incurring expenses, but you're doing it in a smart, logical, strategic way. Next, let's talk about your bookkeeping. Now, we do this, day in, day out for our clients. We have bookkeeping work sessions. And for our clients, it could be every other week. It could be once a week, twice a week, once a month. But if you're doing your own books, we like to say that you really only need to do bookkeeping twice a month, right around the 10th and right around the 24th. Now, this assumes that you have, really good cash flow and everything is running smoothly. So if you think about it this way, every day you're putting money in the bank. So that means your bank balance is going up, 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 up. And then on the 10th and the 24th, it'll go down because you're doing your bookkeeping and you're paying your bills. And then it's going up, 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 and then it goes down. So hopefully it's a really nice trend that's going up, up, up over time. So a bookkeeping work session, which you can do on the 10th and the 24th of every month. Now, this is really good because you don't have to be paying bills every day. You don't have to be doing things every day, just twice a month. It should cover things because the 10th will cover anything due mid-month, easy for me to say, mid-month. And the 24th will hit anything at the end of the month. And this includes payroll. So I'm going to cheat a little bit because although I should have this memorized, there are certain things that we do in our bookkeeping work session. So one is classifying your bank and credit card accounts. And that means you're going into your QuickBooks, you're looking at all of the expenses that have come in from your bank and your credit cards. You're assigning that or classifying that to your chart of accounts. If it's a meal, it's a meal. If it's travel, it's travel. Making sure that it ends up, and then that's like true bookkeeping. You're booking it to the right account. Next thing, you're processing your bills. But before you're processing your bills, and what that means is you're opening up your bills and you're entering them into QuickBooks as a bill. You're not really paying them yet. You're just getting ready to pay bills. So if you've got a stack of, hopefully you've automated a lot of your bill payments, but if you've got a stack of like 3 to 5 to 7 bills, you're entering them into your QuickBooks. So now at this point in time, what's in the bank, and by looking at your AP report, what needs to be paid. So the next thing you're going to do is monitor your cash flow. So again, you take a look and say, okay, if I have this much in the bank and I expect this much coming in and I pay these bills, what will my bank balance be? Because what you don't want to do is go into the negative, right? So you want to check your cash flow and say, okay, well, I can pay all these bills or half of these bills or when or what have you. But knowing that you're going to be doing your bills again in about 2 weeks. So if you decide because of cash flow reasons, you're not paying a bill, you can reassess and decide to pay it in about 2 weeks if the cash flow is right. So you're monitoring cash flow. You're generating invoices. So some people will generate invoices once a month. That's what I did for years and years and years. First of every month, I jumped in and I generated all of my invoices. But you can do it on the 10th and the 24th during your bookkeeping work sessions. Next, you want to manage collections. So take a look at your AR report, see what's due to you, and see if you need to send out any statements, reminders, or make any phone calls. Again, cash flow is king. You want that money in your bank, not on an AR report. Next, you want to process your payroll. And if you're in the mood for a really awesome payroll processor, we recommend Gusto. I'll probably do a Monday morning metric just on Gusto. We love Gusto. It's a great payroll processor, great team, great digital tool and team to have on your side. Sales tax. If you collect sales tax throughout the month, you should be paying it. And if you're on a monthly schedule, typically it's due by the 20th. So if you calculate by the 10th, on your 10th bookkeeping work session, you calculate your sales tax due, you can pay your sales tax and have it and not miss your deadline. Also, then if you're doing it on the 24th, you kind of miss your deadline. So make sure you do your sales tax on the 10th of the month. Booking sales receipts, if you are a cash business and you have a POS or an online store, that should be pretty easy. You're booking your cash receipts because they automatically pop into your bank. But you're going to want to do some bookkeeping to say, well, maybe it's all just sales, but maybe it's certain types of sales. So there you go. You have your adjusting journal entries that you want to do on the 10th and the 24th as well. So that's pretty much it. So every day, if you're getting the money in the bank and you're incurring expenses, this is twice a month. That's it. You think about paying your bills. Don't think about bills that you have to be paid other than 2 times a month. Get out there and sell and deliver your services and don't worry about it, because if your financial engine is working, it's working, and all you really need to do twice a month is your bookkeeping, twice a month, 10th and the 24th. So next, let's go on what you do on a monthly basis. Reconcile accounts. Reconciling accounts is a really important task to do. And you might think that you're reconciled if you're doing your classification and you're matching things in QuickBooks, but that's not exactly correct. Reconciling accounts is when you match what's in your bank accounts or your credit card accounts, any of your financial institutions, to what you have in your QuickBooks file. This magically explains or identifies that it's not magic at all, but this is where you find out if you're missing transactions or you've accidentally entered something in twice. So you're going to say, here are the 10 things that went through my bank account. Here are the 10 things that I have in my QuickBooks file. Check, 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 check. It matches. So reconciliation once a month. Best practices, don't look at any of your financial reports until you've been reconciled, because how do you know if they're accurate? Because if you're putting information into your QuickBooks file, but it hasn't been reconciled to your financial institutions, again, how do you know if there's extra things in there because something was double counted or something is missing because you forgot to enter something in? So reconciliation first is super important. And then next you get to generate your invoices if you do invoices on a monthly basis. And review your financial reports. Your profit and loss statement, if that is not your favorite thing to look at every month, okay, I know I'm a numbers geek, but as a business owner, don't be afraid of your profit and loss. So profit and loss statement is awesome. It tells you whether or not you're running an efficient company, a financially healthy company. It tells you what's coming in, what's going out, and really what you're looking for is what's left over at the end of the day. That's your profit. Mm-hmm. So once you reconcile, print that report and look at it and see what it says, and do it. Run your P&L month by month so you can take a look at trends. Because if you're spending something, if you're spending too much in a certain area, you can identify that, and then you can make decisions on this every day when you're incurring expenses. You can say, you know what? I know that I'm spending too much money at taking people out for coffee and lunch. I need to figure out how much I'm doing, and then you can make decisions as you're incurring your expenses. You get all of that great information from your profit and loss statement. So that's pretty much what you want to do monthly. Quarterly, there are things that you do, and I'm kind of looking down because I'm cheating. I'm looking at the Office Heads track map. So if you want to take a look and get a copy of the track map, go to officeheads.com and download our ebook. It's all in there. So I'm cheating and I'm looking over here. Quarterly pit stops. In January, we call these financial events. We do these for our clients every year. January is 1099 and W-2 processing. The IRS says that you need to have all of your tax forms out distributed by the end of the month. Usually, we usually say it's just the last day of the month. It kind of changes depending on weekends. But in January, you need to have your 1099s out to your contractors and your W-2s out to your employees. With both of them, if you're using Gusto, there's not much you need to do other than double check your work. But if you're not using if you're not partnering with a payroll provider for both 1099s and W-2s, there's some work that you need to do to make sure you have all the information to be able to send it out by the deadline. So January is your financial event when you're really focusing on your payroll tax forms and distributing them. Then in February, you want to create your CPA tax packages because you've got a tax provider out there who's waiting for information so they can process they can prepare your tax return. So the tax returns are due March 15th. So the sooner you get this information to your CPA, the better. And they're going to want to know that 1099 and W-2 information. So that has to go out first. Then pull everything together between the 1st and the 15th of February to get your CPA tax packages out to your CPAs. There's a couple of blog articles on officeheads.com that talk about what you should do to keep your CPA happy. Put it all together in a nice little package, send it all out on time, make sure everything is accurate and your books are clean. That way they have less time digging through stuff and cleaning stuff up, and then your tax prepared bill is less. That's a good thing. Save money, keep it in your pocket. You want to be profitable. Next, you want to measure and set your quarterly goals. So this is like taking 3 steps back. So there's a lot of, there's a handful of tasks, roles, and responsibilities on your financial team. But this one here has to do with you being the CEO, putting on that CEO hat. So every quarter, you want to say, what am I going to accomplish for the next quarter? What do I want to do? What are the tasks I need to do? What are the numbers I need to accomplish? So at the end of every quarter, print out your P&L by quarter. Look at your list of things that you said you wanted to do, your strategic checklist. Hey, I wanted to hire an extra person. Hey, I wanted to purchase another piece of equipment. Hey, I wanted to sell 3 different jobs and increase my revenue by 10%. Print out those reports. Did you meet your goals? If you didn't, understand why you didn't, and reassess and reconfigure what you want to accomplish in the next 3 months. So if you can take your year, divvy it up into quarters and smaller tasks to be able to accomplish, it's so much more easy to attain those goals on a year basis. So if you want to double your revenue in 12 months, take it into bite-sized chunks and quarterly, and then it's so much easier to attain those goals. And if things need to change, you can be quick and nimble and change. So that's awesome. You also, on a quarterly basis, distribute your profits, because that right there is the trophy. That's the prize of running a financially healthy company. It's having profit at the end of the day. So at the end of the quarter, you say, okay, I've met my goals. I have, this much that's left. I'm going to cut myself a check. I'm going to cut those shareholders a check. I'm the shareholder. Yay. I get something to celebrate with, because business ownership is hard. So let's celebrate all this hard work that you're doing. On an annual basis, there are a number of things you need to do. As I mentioned, you need to do your 1099s and your W-2s, your CPA tax package. You need to file those tax returns, create a budget. Here we are in the middle of 4th quarter. Don't forget to plan for next year. Everything, it's really easy to meet your goals when you actually make them first. So here we are, 4th quarter. I'll give you a real quick tip on how to do this. Go into your QuickBooks file, export a profit and loss statement for the trailing 12 months, and do it monthly, and export it into Excel. Then you're going to have this beautiful little template of exactly what you did in the current year, and then you can change around those numbers of what you want to do in the next year. Once you have a really good, solid budget based on the knowledge that you have on your actual activity, that's where you set your goals, and that's what you use when you do your quarterly check-ins on whether or not you're meeting your goals and you are running a financially healthy company. So there you go. Timing is everything. Think of your Thanksgiving dinner. You really don't want to eat your pie before you eat your turkey, before you eat your stuffing. Same thing with financial management. Timing is Very, very important. What you do daily, twice a month, monthly, quarterly, and annually to make sure that nothing falls through the cracks and that you're in control of running a financially healthy company. There you go. Thanks for joining me on Monday Morning Metrics on this Thanksgiving week. Enjoy your holiday, get some well-deserved rest, and as always, have a wonderful and profitable week. See you next Monday.